the next part of the chapter is assessment of partnership firm. And then we'll go on to see how to do the accounting, how do you do accounting for various other businesses. So let's start with first assessment of partnership firm. Now, as you know, in a partnership firm, there will be various individuals who come together to do business. That's a partnership firm. Now, let's take an example of 3 partners are coming together to do business. What the first thing they do is they put money. That money we call it capital. Because to do business, you will need money. Who puts the money? The partners put the money. Now, after putting money, they will take from the money that they have put in and the business that they are doing, they will take 2 components out. Okay, so they will get the capital and then they will get 2 components out. One of them we call it interest on capital and the other is salary. This is what they will earn. Now, the law has said that fine, we will keep a limit of how much interest you can earn on the money that you have gotten. And that interest is capped at 12%. On the salary, they are saying you cannot take out all the profits as salary. Because you're working, we understand. So, we will tell you a mechanism on how to calculate the salary. Okay, how much salary you can actually take as a deduction, as an expense in your partnership firm's account. Okay. So, as I said, the maximum interest that it can take is 12%. Now, to find out how much salary it can take, you have to first find out the book profit. Book profit is calculation of the profit, but you have not deducted salaries. You have not deducted salaries and you have not deducted anything that you have given to the partner in any form. Partners, remuneration or partners, any money that you have paid, that has not taken into account. So that is called book profit. Also, you have capped the interest on the capital at 12%. Not more than that. Even if you have paid more, you will cap it at 12. So this, after removing these particular expenses, whatever you get is called book profit. Now, they are saying your book profit, if there is a loss, then the remuneration that you can take as a deduction to the partners is 1,50,000 per annum only. If there is a profit, you can, and if the profit is a small profit up to 3 lakhs per annum, then you can take 90% of the profits out or 1,50,000, whichever is higher. And if there is more than 3 lakh profit. So let's take an example that in my case, we have a profit of 10 lakhs. So the first 3 lakhs, you will take how much? 90% of the profit. So that is I can take. So my total profit is 10 lakhs. 3 lakhs is the first 3 lakhs. So I can take 2.7 lakhs out. In the second, okay, what is the remaining? 7 lakhs. 7 lakhs I can take how much? 6 sevens are 42. So I can take 4.2 lakhs out from here. Okay, so the total amount I can take is 6.9 lakhs. Out of the 10 lakhs profit, I can take 6.9 lakhs. See how I have done it? First 3 lakhs, you can take 90% of the profit. So 90% will be 2 lakh 70. On the balance, I can take 60%. What is 60% of 7 lakhs? 4 lakh 20. So the total is 6.9 lakhs I can take among all the partners. Not each partner will get 6.9 lakhs. Now, if there is a fixed remuneration that has been agreed to the partner, you can't get anything more than that. The amount of interest on capital cannot exceed the deed amount. The amount of interest on capital cannot exceed the deed amount. Okay. Similarly, in the deed, if it is written, you can get only 10% interest. Then even if the law allows you maximum 12, you can't take it up. Now, understood? So this is how you'll do calculation of partnership firm. Very easy. Learn it. Okay. Because this is a typical question that can come, if not now, in some other exam. Okay. In respect of, now let's see how to calculate. How do you provision for bad and doubtful debts? All businesses have bad and doubtful debts, but mostly banks have a lot of bad debts. Biggest of the biggest banks will have doubtful debts. Now, you cannot say that maximum amount or 80%, 60%, 30% is non-recoverable? Possible? So they have said that we will tell you how much you can record as doubtful debts. Indian Bank or Primary Agricultural Credit Society or a primary cooperative agriculture and rural development bank for these kind, an amount not exceeding. So let's see which banks they are talking about. Indian Schedule Bank or a primary agricultural credit society. So it is actually okay. So it is basically Indian Schedule Bank. Any Indian Schedule Bank, over there they are saying the amount should not exceed 8.5% of the total income. Cannot exceed 8.5% of the total income before any deductions that you're taking. And an amount not exceeding 10% of the aggregate average advances made by the rural branches of such bank in the prescribed manner. So they are saying two things you have to fulfill. One, 8.5% of total income, and an amount not exceeding 10% of the aggregate rural advances made by rural branches. So in the rural areas, whichever is lower, that amount you will have to take as an RDD, reserve for doubtful debts. Now they are saying, provided that it will be allowed in any of the relevant years, deduction in respect of any of the provisions by it for any assets classified by Reserve Bank as doubtful debts, doubtful assets or loss for an amount not exceeding 5% of the amount of such assets shown in the books of account on the last day of the previous year. So they are saying for your assets, 5% of the doubtful assets or loss, 5% of the loss of such assets or loss, doubtful assets or loss. Provided a further deduction in excess of the limit specified in the foregoing provisions for an amount not exceeding the income derived from redemption of securities in accordance with. So they are saying if by redemption of securities you have received any amount, that amount will that amount also you can take as a deduction. No one can claim deduction under 36(1)(6)(a) without making provisions for bad and doubtful debts in its book. In respect of any special reserve created and maintained by a specified entity, an amount not exceeding 20% of the profits available. Okay, so now, provided where the aggregate amounts carried to such reserve account from any time exceeds twice of the paid up share capital and free reserves, no allowance under this clause shall be made. So can't be that your reserve amount that you're putting, reserve for doubtful debt, should exceed to 200 times, that is twice the amount of paid up share capital and reserves. In that case, no allowance can be made. Okay, so once again, just let's, in respect of bad and doubtful debts, they are saying for any bank, it is this amount, 8.5% of total income or 10% of aggregate rural advances. You calculate both, whichever is lower, that much amount these Indian scheduled banks can take. If there is any loss of asset, 5% of loss of assets you can take. Now they are saying, and further a deduction in excess of the limit specified. So whatever is the limit, you want to exceed that limit, fine, we'll give you that, but not exceeding if you have received any income by redemption of securities. So if I had purchased certain securities like preference shares of a company and today I redeemed it, I got money out of it, that is my income. That income they are saying that you can use it over here, so that this 8.5, 10, even you can go above that. Okay, you can use that money. Now, in respect of a special reserve created and maintained, an amount not exceeding 20% of the profits from eligible businesses computed under the heads profits and gains carried to such reserve account. So if you are making any special reserve, you cannot put more than 20% of your profits. 20% of profits is max that you can carry to such special reserves, whatever reserve you are calling. And they are saying that if by any chance the amount carried to such reserve exceeds 200% of the paid up share capital and free reserve, that is your general reserve, then you will not get anything. Then the allowance allowed is 0. Okay. So this is what you do for doubtful debts. Now let's go for another business. Deduction for business of tea, coffee, rubber, etc. Now these, if you see, are special businesses. So they are saying that, okay, because you are a special business, we will give you certain benefits. Now, if you're, let's see which businesses we are taking into consideration. Tea, coffee, rubber development. These are special accounts. It is called tea development account, rubber development account, okay, coffee development account. This account is maintained by the scheduled bank. In most cases, it is SBI. So I go to SBI and I say that, listen, I am a manufacturer of tea. So they will say, okay, you can put your money, that is the profits that you have earned, in a tea reserve account, in this account. Okay. Once I put the money in that account, I can claim a deduction. I can claim a deduction for the amount that I have put in that SBI account. It is my money only. But what I'm doing, suppose if I've got 100 crores and I put in 20 crores in that particular account, then I don't have to pay tax on 100 crores, I'll have to pay tax on 20 crores. So what did I get? I got a benefit of the amount that I've put in that special account. Simple. So let's see for what. So this is the, just understand what it is. Special accounts made for these kind of businesses. Okay, what is this account? These are bank accounts where the money is put. Who maintains the bank account? Government. Okay. What is this? This is also same thing, site restoration fund. If you are into extraction, production of petroleum, natural gas, etc. So what you have to do? You have to deposit the money. As I said, put the money with NABARD or the deposit account. As I said, it is maintained with certain banks. As I said, it is central bank or state bank. Within 6 months, and when I have to put this money? Within 6 months from the end of the previous year or before due date of furnishing return. What is due date? 30th September is the due date for most people. Or 31st July if you don't need your books to be audited, etc. Now most cases you have to get your books audited. So they are saying, okay, 31st March your books are closing. Immediately within 6 months, go put your money in this account. Which account? Deposit with NABARD or the deposit account. Okay. Same thing if you are doing site restoration fund, State Bank of India in a special account under the scheme over here. When I have to do it as per before end of previous year. So you have to do it before the year is ended. Here where you're getting 6 months even after the year has ended. Here you have to do it before the year ends. How much deduction I'll get? Amount deposited. So whatever amount I deposit or 40%. Whichever is less. So max I can put in 40% of my profit. Imagine I earn 100 crores, put 40% there. I just have to pay tax on 60 crores. Okay, but if you're doing this site restoration, max I can get 20%. I can put over there. So even if I put 30%, I get a deduction of 20%. Okay, simple. Easy peasy. Now let's go to the next one. What is this commodity transaction tax? Commodity transaction tax is when you are trading on the stock exchange in commodities. So how you have security transaction tax, you have to pay a commodity transaction tax. It is levied on every taxable commodity transaction at the rate of 0.01. And what is a specified commodity transaction? Means a transaction of sale of commodity in respect of commodities other than agri commodities. So expenditure incurred by a cooperative society engaged in the business of manufacture of sugar for purchase of sugar cane at a price which is equal or less than the price fixed by the government. So mark to market loss or other expected loss as computed in accordance with the income computation and disclosure standards notified under section 145. So this is basically, it is a tax. Just remember what is commodities transaction tax. 0.01% tax I have to pay if I have purchased any commodities on the stock exchange. Now, let's go to the next one, maintenance of books of accounts. Now, every assessee has to maintain books of accounts. What are the books of accounts? The ledgers, profit and loss account books, cash flow statements, balance sheet, notes to account, trading account, ledgers, everything needs to be maintained. Okay. Now, how will you maintain these books of accounts? How? And every person has to maintain it. Let's see. So they have named certain specified professions like your doctor, any lawyer, CS, CA, etc. You come here as specified profession. Everyone else is non-specified. Okay, so what? If your gross receipts are more than 1,50,000 rupees per annum for all 3 years, shouldn't be a one-off case. Or where the profession is newly set up, gross receipts likely to exceed 1,50,000. So basically, if you are newly set up 1,50,000, it is going to increase, or in any of the 3 years. Sorry, for all the 3 years, you have made more than 1,50,000 per annum. Or if you're doing any other, if you're an actor, you're not into specified profession and your gross receipts are more than 10 lakhs. But if you're an individual or HUF, that is 25 lakhs. They have increased the limit to 25 lakhs. So if you are a company and your gross receipts, not your profit, gross receipts is more than 10 lakhs. But if you are an individual HUF, they are saying 25 lakhs. Then, and or they are saying, or if your income, that is your income from business profession, is more than 1,25,000, or individuals HUF, it is 2,50,000. Income is your net income, not your just receipts. Net income. In any of the 3 preceding years. So even if 1 year I have made more than 2,50,000 profit, okay, I'm an individual, then I have to start maintaining books of accounts. Okay, if it is a new profession, I know I'm anyway going to earn more than 2,50,000 net income. What is the difference? Let me explain to you. I am earning 10 lakh rupees, but I am paying salaries of 9 lakhs. Then in that case, I might have gross receipts of 10 lakhs. It's not more than 10 lakhs. And my income from business profession is less than 1,20,000. So in that case, I don't have to maintain books of accounts. Okay. Then, so depending on what you are, where you fall, you have to specified books of accounts have to be maintained. If you fall in any other case, you don't have to maintain it. Okay. If you are less than 1,50,000 gross receipts. If you are in a specified profession, that is your lawyer, CA, doctor, etc. Non-specified, it is 10 lakh or 25 lakhs. And if you are in any basically business, your normal business and your income is 1,20,000 per annum. And if individual HUF, 2,50,000 for any of the 3 preceding years. So I have to start maintaining books of accounts. And what is books of accounts? Your cash book, general copies of bills, vouchers, etc. Okay. Now let's come to tax audit. Tax audit is, see here, I am maintaining books of accounts, but I am not getting an audit done. Audit is a CA will have to do the audit. Audit is compulsory if the turnover, that is your sales, is more than 50 lakhs. And the audit should be done up to 30th September. The assessee should furnish Form 3CA or Form 3CD. This is with the audit report. Okay, if you are a company. And if you are not a company, it is Form 3CD. Okay, so basically, if your turnover is more than 1 crore and if you are a professional, more than 50 lakhs. So if you are a professional, you want to ask someone how much salary, but it looks bad, just ask them, do you do your audit, tax audit? And if they say yes, immediately you should know it is a professional who is earning more than 50 lakhs. Okay, tax audit. And if it is a company, you can very well see more than 1 crore, they compulsorily have to get their audit done. Section 44 AD. Now let's see what is it. 44 AD is presumptive business. Special provisions for presumptive business. What is presumptive business? Basically, if you're earning less than 2 CR and you're not into plying hiring business or a professional, etc., small time business person. So you basically just take 8% of your gross receipts, less deduction or remuneration made to partner, taxable income from business. You'll get it. Directly your 8% you will get. But you will actually get 6%. Okay, you instead of 8, even better, 6% if it is all the money, whatever money you're getting through banking channel directly. That is GPay, etc. you do. Then they are saying, okay, on that money, because it is white money, we will charge you 6%. Just pay 6% as tax and you're done. Okay. Who is eligible but? Only individuals and HUF. Individuals and firm with the residential status. HUF only. No LLP, no company can take benefit. Otherwise, they'll just pay 6% and they are done. Individuals, HUF, firm with resident status only. Only they can take. Now let's come to the next business of plying, hiring, etc. If you're into this business, basically trucking business, and you don't have more than 10 goods vehicle, then if it is not a heavy vehicle is basically more than 12,000 kilos. So more than 12 tons is not there. Rupees 7,500 into number of months into number of vehicles. Rupees 1,000 per ton of gross vehicle weight or unladen weight. So if it is a heavy vehicle like those big huge cranes, then rupees 1,000 per ton, depending on how big that vehicle is. Okay, into number of months, same thing, into number of months, into number of vehicles. Now, if you see 44 AD and AE, they are very different. 44 AD, AE is only for resident, HUF, okay, partnership firm. It doesn't come, LLP is not allowed. Okay, a company, I told you that. This is applicable to everyone. This has to be a particular business. So, but they have said every business is allowed except this hiring business and specified under 44 AA. What is 44 AA? Your businesses of lawyer, doctor, etc. Okay, the specified professions and income in nature of commission or brokerage. If you are a broker, then no, sorry, you can't take benefit of just paying 6% or 8%. Okay, this all is there. 8% is only, that is your profit. 6% if it is from account payee, check, etc. Heavy, over here it is something else. Rupees 1,000 per ton of gross vehicle, okay, and 7,500 if it is other than heavy vehicle. Simple. So you will divide it for this trucking business. Heavy vehicle, you will take rupees 1,000 over here per ton. So 1,000 per ton. So if it is say a 12,000 ton vehicle, they will give you don't have to guess the tons of the vehicle, 12,000 ton vehicle. So you will do rupees 1,000 into 12. So it will be 12,000. Any other vehicle, if it is not a heavy vehicle, you will take 7,500 into number of vehicles, into number of months that vehicle was running. So you will divide it and then add it up. So for example, I'll just give you over here example. So I have 2 heavy vehicles. Okay, and 3 light vehicles. Okay, I'm just 2 heavy vehicles plus 3 light vehicles. So how I'll do for, let's do this together. For 2 vehicles, heavy vehicles, and I'll tell you each one is 12,000 ton. 12,000 kilos. Okay, 1 ton is 1,000 kilos. So, rupees 1,000 per ton of gross vehicle weight. So, let's say it is 12 tons. So, I'll take 2 into 12 tons 2, and it worked for 6 months of the year. And these vehicles work for 8 months of the year. So let's see how you do. There are 2 vehicles, number of vehicles into 12 tons. This is the price, 1000 per ton into 6 months. Okay. Plus 7500 into how many months it worked? 8 months into 3 vehicles. Okay. Then you'll add it. 12, 6 2s are 12, 12, 12, 144. Okay, plus this will be 8 3s are 24 into 7,000. 1,80,000. That comes up to 3,24,000. Okay, benefits, assessee deemed income. So this will be the net taxable income, 324. Okay, that's it. This is how you will compute it. Now, set of brought forward losses shall be available in both cases. You can take up the losses of the last years. No deduction shall be allowed from this income. You can't take a single deduction, not even partner's expense, nothing you can take. Earlier it used to be allowed, now no expense can be taken. So basically whatever amount you get will be taxable. That's 6%, or if you're doing in terms of this, 7,500 into number of vehicles, etc. If you're doing this, you don't need to maintain any books of accounts. Isn't it higher? But if you are saying that no, I don't want to pay as per this method and I want to pay lesser than this, then you have to maintain your books of accounts. Okay, now let's go to the next one. Profits and gains on presumptive business. Now let's say if you are a professional and your gross receipt is above, whose gross receipt is up to 50 lakh, then 50% of the total receipts or sums you can take as an expense. So only on the remaining 50% you have to pay your tax. So for example, if I am earning 40 lakh rupees an annum, what they are saying, 50% you take as an deduction and 50% you pay as profit. So what will be my profit? 40 lakhs I am earning, 50% is 20 lakhs will be my profit. Okay. No further deduction is allowed. So it will be a standard 50% deduction of all expenses. The WDV of any asset for the purpose shall be deemed to have been calculated, so you don't have to take depreciation on any of the assets as well. That 50% what they are giving is the full and final expense deduction. Okay, now let's see how sale consideration in case of real estate transactions. Now, in case of real estate transactions, if the consideration is received on transfer of land or building or both, and the consideration received is less than the stamp duty value that the government, there is something called as a ready reckoner. Ready reckoner value is less than the consideration received is less. So if the ready reckoner value is more, the stamp duty value is more than the consideration received. Okay, basically consideration is less than the stamp duty value. Such value, consideration is less, such value shall be the full value of the business. Consideration received is less, so the stamp duty value will be the consideration value. Assessee can, so if he feels that no, the stamp duty value is supposed to be the actual value. So let's say the stamp duty value they have calculated as 100, your consideration is 10. They are saying, the government is saying you pay your taxes as per 100 only. But you say that no, this is wrongly written and the authorities have wrongly put in 100, the actual value should be 10, market value should be 10. So the assessee can go before the assessing officer, stamp seeing that the stamp duty value exceeds the fair market value on the date of transfer of such value and he has disputed it, then the assessing officer may refer this to a valuation officer. Then when the valuation officer will do the valuation and he finds the valuation officer valuation done is less than the stamp duty value. So basically even the valuation officer is saying, you said how much? The consideration is 10. Basically that is your value. Okay. The stamp duty value is 100. But the valuation officer removed a value of say 50. So now what value to take? The valuation is done is less. Then the value of the valuation officer shall be taken as the consideration. It won't be stamp duty value, it will be the valuation officer value. Now, this is one case. What if the difference is actually, he's saying that no, instead of it is only 11. You are saying 10, he's saying 11. Let's see. Provided where the value adopted or assessed by the authority for the purpose of stamp duty does not exceed 110% of the consideration. So over here, what is my consideration value? 10. What is increased by that? 11. It does not increase. They are saying, okay, fine. The difference between you and the officer is not more than 10%. We'll take your value. But if it is obviously more than 10%, so instead of, if it was actually 50 or not, let's say for example, it was 20, then they will take this value. Okay. If the valuation officer says 20, you said 10, stamp duty value is 100, they'll take 10. But if the valuation officer would have said 11, they would have taken 10. Basically, the difference should not be more than 10%. The consideration so received for the purpose of computing profits and gain will be the full value of the consideration if it was within 10%. Okay. But if it was not, then it will be valuation officer's price. Now, where the date of agreement for transfer of asset and date of registration of such transfer are different, the stamp duty value. So what if the date I transfer the money and the date of registration, agreement date is different and the date of registration is different? Could be possible. The stamp duty value on the date of the agreement is considered only and only if there was consideration paid on that date. So it can't be just a backdated document. You have to prove that yes, I paid the money and not by cash, by account payee check. Okay, then only we'll take your agreement date as the date when you actually signed it, provided you actually paid money as well. If not, then it will be the registration date, because there is no other way to validate that you just did not take the document and put a date and signed it. It can't be backdated. Okay. Now the last part, computation of income from construction and service contracts. Now if you see these construction contracts, the building is not yet made. There is only construction going. Sometimes it takes 2 years to just dig the pit and to make the plinth area. Now in that case, how do you book the profits? Do you at all book the profits or no? Or only when the last floor is built and sold, you'll book the profits? So there is a different way under the income disclosure standards how to find out the profit of such construction contracts, because the government cannot be waiting, okay, after 10 years the building is made, then the profit will come, then the government will earn the tax. Fair? So they are saying, okay, the profits and gains arising from a construction contract shall be determined on the basis of the completion method. So if 10% is completed and you have been able to sell 20% of the, because under construction property is also sold, they are saying fine. So 10% is built and you sold 20%. So you can actually book the amount of that excess amount as your profit. So it will be determined on the basis of completion, construction. Okay. So provided the profits arising from a contract for providing services. So it could be that they are just provided certain services, or it could be you're actually doing the construction. For all of them, this method will only be applicable. Profits and gains from contract for providing services, duration of not more than 90 days shall be determined on the basis of completion method. So it should not be more, so it should be short contracts. Just a 3-month contract. There are, when let's say, because there are different companies, like some are only experts in plinth area, some are experts in only construction of the walls, some are experienced only to make the foundation. So if it is only a short term project of 90 days, then you will take it on the project completion method. But if it is a long term period, that is of 4 years, 5 years, okay, and there are number of acts over a specified period, then for this method, project completion will not be the correct method. You take straight line method. 10-year period, so every year at least 10% should be done. So depending on that, if you have completed, your target is not to complete the entire building. Your target for the first year is only to complete 10% of the entire project. So based on that, you will do the contract revenue. So you will retain that much money, and that will be deemed as your profit. The contract revenue shall include the retention money. How much can you put in as your revenue? Including retention. Retention money is that you keep in safe custody for the contract, because if you ever study construction contracts, you will see you cannot put the entire amount as your income and take that as your profit. You have to put some money as retention, as an escrow, that tomorrow if something happens, I have money kept because the building construction is still pending. The contract cost shall not be reduced by any incidental income in nature of interest, revenue. All of that is not taken into account. You will simply take the profit, you will simply take the revenue, which is based on the straight line method. Basically in 10-year projects, okay, or a 5-year project, every year you have to complete 20% only. Okay, so this is how your entire different aspects of your businesses and income from business is done. This is complete. Nobody can say that income from business profession is tough. Just understand, we have completed all of this. I'm taking you through just once more and then we are done. Okay. So we started with for partnership firm. Then we went ahead and we saw how tea, coffee, rubber plantation, site restoration funds are done. Then we saw books of account maintenance, audit, compulsory audit for certain companies. Then we saw presumptive business. And then we also saw for planning, hiring business, that is your trucking business. Then profits and gains for professions who are earning up to 50 lakhs. So you can take the 50% flat rate as your profit and pay tax on only 50%. For real estate transactions, you will take the stamp duty value. But if you are contesting the stamp duty value, then the valuation officer will determine it. Whatever valuation officer determines will be the price, provided if it is more, the difference is less than 10%, then we'll take your price, your consideration value. And then we finish with construction contracts. You will take, there are only 2 methods for finding construction contracts. To find out the profit of construction contract, if it is short term, within 90 days, you take it on the project completion method. If it is a long term, that is a longer period, then you take it on straight line method. And the amount, whatever you can take as your revenue, will be determined, shall include the retention money. Okay. Thank you.